All right, we're live. So welcome back to Dapp University. So, we just had a long break from our live streams over the past week. So I appreciate everybody who's, stuck around and returned back to these live streams. It's good to get a little bit of a break. But now we're back into our normally scheduled routine of having these live streams Monday through Friday, about 9:30 a.m. Central Time on this channel. So today we're going to kind of jump back in and actually look at a lot of stuff that happened last week that I wasn't really here to talk about. But first, we're going to talk about, the thing that's probably on everybody's mind as they're waking up this morning and like checking on the crypto markets is like, hey, what's going on with the crypto prices? Should you be worried? So we're talking about that. Like I said, everything that really happened last week, some of the highlights, answer some of your questions and a lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to become a blockchain master step by step, start to finish, then head on over to dappuniversity.com/bootcamp to get started today. All right, so we got people jumping in the chat here. We got Culture Highs, Automatic Beats, Code Chap, Cryptechnology, Simon, Dirk, Bruno. Welcome. All right, so let's go ahead and jump into this first kind of item here, which is what's going on with the crypto markets, because I see a lot of people kind of like freaking out about this, trying to create an explanation for, the prices. So, before I, kind of throw my 2 cents in on this, I'll explain sort of the thing that I say always before this, which is markets are complicated. There's lots of different factors about why prices move in one direction or the other. But I want to talk about some specific factors that I think have a pretty significant influence over what's going on right now, or at least people's sort of fear about what's going on right now. So, people are worried for a long time about sort of the state of the global economy, the state of the stock market, the state of, pretty much any asset, the housing market, all that type of stuff, and are always looking for something that can come in and just sort of like prick this fragile bubble that is out there right now, okay? And I think one of the biggest fears is actually happening, or one thing that people are scared about is what's going on with the Asian real estate markets right now. So I'm talking about that here in a second. But also what I want to say is that crypto is not in isolation, right? So crypto prices move up and down. Sometimes crypto, kind of does its thing regardless of what's happening with the overall, economy. Like I said, we saw crypto going up like crazy last year. Despite what's going on with the stock market, in many cases, of course, it dipped when the stock market did back in March. But right now, of course, crypto does not exist in isolation in the sense of when stock markets go down, just like in March of last year, crypto markets tend to do the same thing, and we're seeing that across the board. So it's not just crypto that's had a bad week or a bad few days. The stock market is as well. I mean, pretty much all markets are having a little bit of a bad time right now. So crypto is no exception. So I guess you have to step back and ask yourself, what are people worried about? What are some of the things that people fear for in the overall markets, not just the crypto markets? Well, is one big thing for sure that people are talking about a lot this morning, as like I was saying before, which is what's going on with the Asian real estate markets. So let's check on that right now. So basically, we have fears over as property in China with Evergrande. Okay, so what is Evergrande? Well, they are the second largest, I believe, let's see here, the second largest property developer by sales, all right? And so basically we have some issues with some credit defaults potentially here. This could lead to some insolvency. And I'm not going to come up on this live stream and try to pretend to be an expert in Asian real estate by any stretch of the imagination. But this is something that I'm seeing floating around. Lots of people are talking about. Like I was saying before, people are kind of worried about the global economy in general, and they're always looking for what's this thing that could come in and sort of prick this bubble that could cause the whole system to come crashing down. And some people are saying like, hey, this could be it. This could be the thing where starts to see some of this risk and debt unravel that could have a cascading effect that could affect the overall markets. So that's sort of one line of thinking. The other line of thinking is that, hey, this is a problem, but it's a localized problem. It's not a massive systemic risk to the overall, global financial system. So, I'm leading in camp number 2 that this is probably not a global, risk to the entire financial system. Of course, I'm not an expert in this particular area. Okay, but one of the reasons I guess that I'm saying this is, the amount of times that you could correctly identify a systemic risk to the global financial system is only a handful of times, over the past 100 years. And you would be wrong more often than you would be right when you try to call those things. And so that's kind of why I'm leaning in camp number 2. So if that's true, and we see this with the crypto markets kind of affecting everything where, stocks are down, crypto's down, everybody's kind of freaked out. What do I think is going to happen with the crypto markets moving forward? So I'm still remaining cautiously bullish on the overall space, okay? Now, in the short term, I don't necessarily know what that means is going to happen with the individual prices of each specific cryptocurrency. But the reason I continue to be cautiously bullish with the overall space is, aside from some major systemic problem, nothing has really fundamentally changed in terms of the adoption of cryptos, in terms of people being hungry for gains long term. And so that's why I maintain, cautious bullishness. So, of course, we've seen, about a 20% correction in crypto prices, honestly, since past month or so, right? We're up here with Ether for sure, close to $4,000, now getting down closer to $3,000. Other cryptos, really similar story in terms of the majors. Okay, now smaller cap cryptocurrencies, of course, you could be coming in here making explosive gains in either direction, regardless of what's going on with the majors. But that's kind of what I'm talking about, these major coins and sort of as an index for the overall crypto market. So, that being said, let's actually just go ahead and check on some of the individual prices here. So Bitcoin, we're at 43,922. Okay. We've erased, a lot of gains from Bitcoin over the past, month or so. But again, that's the same story with a lot of different markets, right? I mean, we've erased gains from the S&P 500 for over a month. Okay. So everything looks pretty correlated at the moment. Somebody says they're currently down 20,000, still going to let it ride. I think if you're holding for the long term, it's probably smart. Don't like to give financial advice on this channel, but that's just my quick take. So, I think. Yeah, people are worried about the overall sort of health of global markets, but there are other uncertainties that are kind of, looming for crypto. We still have uncertainty about the U.S. infrastructure bill and what that's going to say about crypto. I think that has people kind of depressed about the crypto markets in general, in the sense that you're not going to see this exuberance that you would if we had full clarity on this type of thing. But there are some other really bullish things for the overall crypto markets on the horizon. In addition to the adoption, that I talk about a lot in this channel, that's really what I try to focus on. Is the actual technical fundamentals. Of course, teaching you how to break into this industry and become competent technically with blockchain and understand it, really master it. But in terms of kind of trying to forecast what's going to happen with the overall space and actual prices, is looking at that technical adoption of the technology and how that can actually accrue to the assets itself, because fundamentally cryptocurrencies are supply and demand assets, and as you create more demand for them, assuming that the economics are sound, then that moves the needle on the price. That's what I always like to focus on, is the fundamentals. But one particular thing that we're talking about coming down the pike is ETFs. Okay, so we have some rumors, okay, that we could see some Bitcoin ETF approvals pretty soon on the grand scheme of things. I'm seeing some people call for ETF approvals in October. We don't know if that's true or not. But if it is true, or if it's even close to true, maybe we see some sooner than that, or not sooner than that, but not much shortly after that, then that could be big for Bitcoin as well, because really what it does is it merges crypto with traditional finance, and people getting exposure for the Bitcoin through exchange-traded funds. Now, some people say, hey, that's kind of silly. We want people to come in and actually buy Bitcoin and custody it themselves and actually use blockchain. But that's probably not going to happen for the vast majority of people who aren't going to adapt to the new technology as fast. And just giving them the ability to hold Bitcoin through an ETF is pretty big in the sense that it can bring in a lot of new users, okay? And also, there's some advantages about having Bitcoin through an ETF. You're probably going to see it actually integrated into more traditional financial products, people's retirement plans, all this type of stuff. There may be ways they could be buying Bitcoin with tax advantage strategies, all that type of stuff, which would give more people new reasons to buy Bitcoin, which would be huge. And as that, happens for Bitcoin, we can see that, happening for other crypto assets as well, and sort of having that trickle-down effect through the entire ecosystem. And if that is true, and we do see ETF rules pretty soon, it could be absolutely nuts. Okay, so let's look at some other things that happened since our last live stream we did, over a week ago. Look at some of the highlights here. So one particular thing that was of interest, we had a couple outages happen while I was gone. So one of the most notable ones was actually Solana being down for quite a while. Was not producing blocks for, it looks like, 17 hours, according to Bloomberg. I saw a lot of this kind of happening in real time. So some of the details are a little bit old in my mind. So we're gonna have to trust Bloomberg that they're actually reporting the details accurately here. But yeah, so the Solana outage, is a big deal. I made a video on Solana a while back, kind of talking about my thoughts on it. You go check that out if you want a more detailed explanation. But I do think, one of the things I said in that video is, one of the reasons that Solana is able to achieve the kind of performance benefits they are is because of the trade-offs they make. Anytime that you're working on blockchain scalability, you're at tension between three things, scalability, security, and decentralization. It's the scalability trilemma. And basically, security, decentralization. So anytime that you have that triangle, you typically have sort of one thing that you're making a trade-off on. And, with Solana, basically, it's the decentralization aspect. One of the biggest reasons is the hardware requirements required to run a node that processes that many transactions per second. And we kind of saw that come through, to this particular event. So it's kind of interesting, timely about how this happened, right after that video went live. But you're kind of watching that play out in real time. So it's not like a diss on Solana or anything like that. We've seen this happen to other blockchains in the past too, even projects that I'm personally interested in as well. So it's just one of those things where you have to watch it happen in real time, and then you sort of learn some of those lessons the hard way. So we did see another outage with Arbitrum as well. Let's just see here. So Arbitrum is a layer 2 for Ethereum. Let's just take a look here. Some people jump off the stream after that one. So Arbitrum, let's see here. Arbitrum is a layer 2 scaling solution for Ethereum. It's a separate environment where you can basically do transactions. It's kind of like a blockchain in and of itself, but really it settles its final transactions on top of the Ethereum mainnet. Okay, and it also derives its security and decentralization. Well, not so much decentralization, but it's security from Ethereum mainnet itself. And so we did have a small outage on Arbitrum. Okay, that was approximately 45 minutes, where the sequences were offline. Funds are never at risk, but one reason I bring this up is basically talking about how you need to be careful when you're using this stuff right now. I've been talking a lot about layer 2 scaling solutions for Ethereum and how I think they're a big deal because they allow us to have, big performance upgrade and throughput for Ethereum itself without making massive, compromises on security or things like that. But one thing you have to be very careful with is this is very new technology, right? While Ethereum is very old and very decentralized, whenever you move to a layer 2, a lot of these things are in alpha, they're in beta, they're in really early stages, and you have to be careful, okay? You have to definitely don't try into this stuff with funds that you don't need or can even afford to lose for, a short period of time. So this, like I said, no funds were actually at risk during this time, but it'd be one of those things where you couldn't touch them for 45 minutes. And it's one of those things where even if the eventual result is fine, you might be pretty panicked for 45 minutes if you can't access your money. So as always, be careful. But also speaking of layer twos, we are seeing some pretty significant improvements in this space, right? So layer two scaling solutions, like I said, I've predicted that they would, be widely adopted this year. That's starting to become true. And we're starting to see sort of a race for layer twos to compete with one another to provide the best user experience and actually get adoption and get real apps on top of it and be competitive with one another. And some of the big contenders in the Ethereum space for optimistic rollup space technology are Arbitrum and Optimism. So we just looked at Arbitrum a second ago. And Optimism actually had an announcement last week where they're going to offer one-click deployments of Ethereum dApps to their layer 2 environment. So basically, they're talking about contracts will deploy with a click of a button. Basically, all the tooling you love and know will just work, and it's all built around Ethereum. Okay. So this is one of the reasons I've been so excited about optimistic rollups in particular. Is a scaling solution that essentially allows applications to be ported over to this layer 2 environment with really no code changes, right, on the grand scheme of things. You might have to change a few things, but it's not like you have to rewrite your application. And one of the reasons that's so amazing is because there's like hardly any friction involved for, seeding that ecosystem from an infrastructure standpoint or a protocol standpoint. So if we have all these apps that have network effect on top of the Ethereum network, they can just be instantly moved, basically, over to Optimism or Arbitrum, right? Any of these layer 2 environments that support optimistic rollups. And that can really speed up the adoption of these technologies. So other layer 2s are harder to do that particular thing for. And of course, these optimistic rollups technologies have some trade-offs that they make as well. One of the most notable ones is the withdrawal period, but there are ways to also circumvent that. So we can look up actually look up the TVL on layer 2s right now. Kind of look at some stats on this. So Optimism and Arbitrum have been growing significantly. Okay. Arbitrum has been growing a lot. All right. Now has 73.94% of the market share. All right. We've got $2.6 billion locked into Arbitrum. It's pretty crazy. Now, one thing to note is this TVL is automatically going to change whenever cryptocurrency market prices change. So let's say there's a fixed amount of Ether in this layer 2. I mean, net, the amount of Ether is growing. But let's say that it's always like, I don't know. Let's say it's always 100,000 Ether or something like that. The TVL value in US dollar terms is going to go up and down based on what the Ethereum price is. So we can also look on, we can also check on the ETH burning statistics. Let's take a look at those. Let's see how much ETH is being burned right now. So we already see a deflationary block here. So what am I looking at right now? So we're looking at the basically the statistics from the EIP 1559 network upgrade. So this is something that went live the past couple months. Basically, this is a network upgrade for Ethereum. It's not part of the Ethereum 2.0 roadmap or anything like that. It's just been a long-awaited upgrade that basically changes how the fee structure works for Ethereum, or basically whenever you create new transactions, anytime you're sending cryptocurrency from one account to another, that the fee that you pay to perform that transaction gets to split up into two parts, the base fee and the minor tip, and that base fee gets completely burnt and erased from the network. And this, whenever the network is used a lot, that this base fee burning can actually offset the amount of new ether that's created by the blockchain whenever blocks are mined. And so we're seeing examples of that here. So I just saw a deflationary block fly across the screen here. Looks like it's gone now. But basically, anytime you see a block where more than 2 ether is burned, that's a deflationary block. So ETH is not deflationary by nature right now. Like, this is not a deflationary block. None of these are deflationary blocks, but it's still offsetting the amount of ETH that's getting created here somewhat. Okay, it's slowing the rate of inflation. But you can actually look at the chart on here. You can... let's see here, simulate the merge. And basically you can see that, like, right now with the current network activity, if ETH 2.0 was live with proof of stake right now, that ETH would be deflationary at the current network utilization to the tune of negative 1.9% per year. And that's a change that will probably come up within the next 6 months or so, will be my guess. That's not an official projected date, but that's my guess. Somebody says gas fees have been worse since the upgrade. Well, network usage has been up since the upgrade. EIP 1559 in and of itself doesn't directly affect the gas fees. It can affect how transactions are priced, and it actually improves some of the user experience in that regard. On-chain gas oracles, all that type of stuff, but it doesn't necessarily do anything to directly reduce the fees. It's still a supply and demand based system. And Ethereum 2.0 doesn't necessarily do anything to reduce the fees. That's what layer 2s are for. Did I talk about Litecoin? No, I didn't, but we did see something that happened last week where basically we saw some fake news come up that was a Litecoin partnership with Walmart, I think is what it was. We saw an immediate pump from Litecoin and then an immediate dump, and the entire crypto market dumped with it. Briefly. I mean, it wasn't like a massive sell-off or anything like that. And yes, we also did see, let's see here. So one thing that we did see past week was some insider trading happening on the OpenSea platform. So I didn't look that closely into this particular story, and I don't want to get off into the weeds here. I'm not going to like name and shame or anything like that, but it does look like it's true by all accounts. Okay, so this is something to definitely watch out for. I think it's interesting because this is one of those things where it's easier to track on a public ledger. I can't imagine how many people who run centralized exchanges have been guilty of insider trading and nobody's going to know. So yeah, this is definitely something to watch out for. We have people who are like, hey, people get really confused about the difference between insider trading and also publicly available information, that it's so early that unless you know what you're looking at, you're not going to know why it's significant and can't take advantage of it. So this is brought up a debate, like, hey, what's insider trading? What isn't insider trading? Insider trading is basically whenever you have specialized knowledge that nobody else in the public has available to because you're privileged. Maybe you run a product, something like that. Maybe you're part of the team that surfaces information to your application. You see the information first and then you act upon it before everybody else does. Okay, that's insider trading. But if you have basically information that's out there completely public on a blockchain, the entire world knows about it, and you're just able to pick up on those things before everybody else does, that's different. So let's see if we got some questions here in the chat. Is tomorrow a significant day for crypto investors? It might be. Might be some dip buying opportunities. We'll see. Somebody says S&P 500 down 11%. Is it 11%? Let's take a look. Doesn't look like it's 11%. Maybe that's a projection. Do I think ETH will hold below 3,000? That's a good question. So let's actually look at the ETH price. What I think is going to happen. So I'll just take a look here and kind of spitball this. So I'll do a little bit of analysis here. So full disclosure, right? This is not financial advice. Nobody knows exactly what's going to happen with the cryptocurrency prices. But if I look at this in terms of probability, because I made some significant ETH buys up in here, kind of in this price range. Some of them are at a loss right now. I'm holding because it's some of the money that I bought in for the long term. Do I wish I waited to buy now? Sure, but on the grand scheme of things, like, am I going to really care if it's a 20% difference in my buying price? I don't really think so. It's all for the long term. You always wish you could have done better, but hey, it is what it is. So kind of in my thought process with that, what do I think the likelihood is that we would, go down, much, much lower? Well, when I was thinking through this, I was thinking I'm going with the assumption that fundamentally nothing has really changed about the space in terms of the adoption and what the prices are doing to mirror that adoption. Okay, so if you start with that, and that is true, and you have a general bullish bias in that regard, or you have a bullish thesis in that regard, that we're trending upward and still on an exponential trend, then in the short to midterm, what's the potential downside risk from this price level? Well, probably like down here, I would think would be the lower bound, right? So from here, roughly like a 50% difference, okay, 50% downside risk. And so, the likelihood that we would drop back below like a $2,000 level seems kind of low, okay, because we saw some somewhat support here when everybody thought that it was game over and they were going into a multi-year bear market, and that didn't turn out to be true. Yeah, I would think that this would look like our lower bound, right? So just my 2 cents. Again, nobody knows for sure what's going to happen, but it doesn't seem very likely that we would go much lower than that, assuming that we are still on a long-term uptrend, which, like I was saying before, I don't have a good reason to think that we're not. Somebody says, thank you so much for everything. The person that got me the job, the founder for Project HBAR. Thank you. Awesome. Awesome. So I got some other questions in the chat here. What's the difference between an interface and the contract? That's a good question. So an interface is really just, if you're talking about actually in the Solidity code itself, so like if you see something that says interface and then it has a name, a contract name, and then it has like some functions inside of it, versus like contract and then a contract name, then it has some functions inside of it. The interface is really just a description of how the contract works. So that would be an existing contract that's out there somewhere else that you want to interact with, and you just want to know what the interface is. So a really common example of this is you have a smart contract that uses an ERC20 token, and it has to call like a transfer function on an ERC20 token inside of a function that you have written yourself. Well, you need to know what an ERC20 token looks like, and so a lot of times you'll have this thing that's called like ERC20 at the top of your file, or maybe it's imported, and like that's just the interface to an ERC20 token, and you could pass in any ERC20 address because it's ERC20 compliant, and you could reference that interface to code against it to write ERC20 functions inside of your smart contract. But if you're talking about like an ABI, like an abstract binary interface, that's just a JSON file that describes how your smart contract works, what kind of functions are on it, what arguments those functions have, what public variables, it responds to, all that type of stuff. I'll get one more question, then we'll sign off for today. So on-chain metrics, we'll look at some on-chain metrics in another stream. Let's see here. So basically, somebody said about what is a fair market price for ETH right now. So here's the thing. I don't think about it necessarily in those terms, in the sense of I can divine what an exact number is about what one Ether should be worth based on any, given time. But I know that we have like all these fancy valuation metrics and all that type of stuff. I generally try to think in really broad brushstrokes. Like, is the space moving forward? Are we seeing basically more users entering the ecosystem, more active addresses, more activity trending higher on the network? And if that's true, and if the ETH price is detached from that, especially relative to what's happened to other crypto ecosystems, and I think that I perceive that as undervalued. Okay, and so that's what I see happening right now. All right, everybody, so that's all I got for today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel. Again, we're back to our normal programming of going live about 9:30 a.m. Central Time, Monday through Friday on this channel. So welcome back, everybody who joined today. Excited to have you on. Join us tomorrow, again, 9:30 a.m. If you're fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? You go to my YouTube homepage. You can find any of my free courses there. They're like Udemy courses, but they're totally free. And if you like those and you want to take the next step, or hey, maybe you want to take a master shortcut entirely, I can show you become a blockchain master step-by-step from start to finish over at dappuniversity.com/bootcamp. You don't have to be an expert to get started today. I've helped people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. Until next time, thanks for watching Dapp University.